Tesla crushed delivery figures without a doubt. However, that's not the biggest secret for forecasters. We will try to enlighten 6 unanswered questions about Tesla's stock projection in the video. What are the biggest reasons that make Tesla so good at having such a high margin? What Elon Musk and Cathie Wood are thinking about Tesla's gross vehicle margins? What's Wall Street really missing? Why Wall Street is devastatingly wrong? What is the future potential of Tesla? And will Tesla's production beat Toyota's? Make sure you hit the subscribe button. Now let's have a quick look at Tesla's delivery figures, and then let's touch base on what actually Wall Street is really missing behind these numbers. Well, take a look at this here. Tesla Q1 delivery figures. They have 0 production for the S and X, which is actually telling us about the huge refresh with the S and X, where they are changing the steering column to that half wheel. In fact, they are making the S and X look like the Model 3. This is really condensing the number of parts the vehicle are expected to use. It's a clever move and makes Tesla ever more efficient. This is one of the biggest reasons that make Tesla so good at having such a high margin. We figured that Tesla's margin is going to settle down around 27%. Elon Musk expects that Tesla could get their gross vehicle margins to around 30%. And Cathie Wood recently says that Tesla could get to 40 to 50 gross vehicle margins, even though she adds a lot of automation revenue from robotaxis. The point actually was, the more streamlined the production, the better it gets. And this shutdown in Q1 of the S and X aligns production lines. This is a huge investment in profit and margin growth for Tesla and is really important. Let's talk about what Wall Street are really missing. Actually, there are 2 big things they are missing. First one is the explosive growth of the S and Y. Wall Street are aware of the fact that Tesla's Fremont and Tesla Shanghai are both providing and becoming more extensive to get to 1 million vehicles produced per year right now. What is Wall Street thinking? That these are just 500,000 vehicle facilities, and even though Tesla's talked about their plans to expand, Wall Street's being generally bearish on Tesla. In fact, they are not just getting these production figures. Besides, they are having the right amount of demand for these vehicles. In addition to that, Tesla is actually having enough demand from people who want to buy the S and Y and not wait a long time for those vehicles. Until now, Tesla hasn't had a demand issue and only a production holdback. This blowout of Tesla means that they are beating Wall Street's estimate of combined deliveries of 174,000. This shows us that Tesla is ramping up their S and Y production quickly, which means it's amazing for their stock. It's also the biggest sign that Tesla is on the way to potentially taking down their expectations for the year now. Also, they have suggested that they might hit 880,000 to 900,000 vehicles. However, Elon Musk just hinted in the last few weeks that they might actually have an internal target of 1 million vehicles produced this year. If Tesla can keep their promise to produce and deliver 1 million vehicles this year while still having to wait for more orders, Wall Street might finally understand that Tesla is actually making a lot of good progress. There are still many Tesla doubters who get upset about the current price to earnings ratios. Also, they do not like to build in future potential growth prospects. Let's take a look at it with Zoom as an example. Zoom might have this exponential growth during the pandemic. However, people are expecting that exponential growth to fall or rise. The rate of that growth could be quite slow. Zoom could be at this point or at that inflection point with their growth. And people see the same thing as Tesla. In our opinion, investors thought that Tesla have had a great couple of year run, and their growth is going to slow down, and for that reason investors were being cautious about producing and delivering of Tesla. With this point, Wall Street is devastatingly wrong and is not figuring that in 5 years Tesla might be producing and delivering 4 to 6 million vehicles. That estimates Tesla delivering 184,000 this quarter, and that puts Tesla right here at the start of this S-curve. And today's numbers are a big slap in the face to whom have doubted those numbers. Let's talk about the Tesla doubters. We believe they assumed that Tesla will shut down S&S production and they will have lots of issues because historically Q1 is slower for car sales. Also, Tesla's valuation is higher than expected based on 2020's price to earnings ratios. Those opinions might affect people about Tesla. However, that created wrong foresight about not to invest in Tesla. Let's look at the future potential of Tesla. Elon Musk now updated this to 1 million deliveries for 2021. In our opinion, Tesla should be able to get up to 4.8 million by 2025 because the demand will be there for Tesla, especially when full self-driving cars come out. There will be no competition for Tesla. In addition to that, the total revenue seems that it will be around 235 billion. Even insurance hasn't been included in that number. If predictions are right, Tesla's production could potentially reach as high as 14 to 15 million vehicles a year. According to those numbers, Tesla's production will beat Toyota's productions. That actually means markets will see real impact of the full self-driving system. At that point in the long future, if investors want to start looking at lower price to earnings multiples, Tesla will likely to be at 10 to 14 million vehicles produced and delivered. We figured that by the end of 2025, Tesla will be worth around 760 billion. And that would give investors about a return on their money if they bought Tesla shares today of around 21.6. Also keep in mind, Cathie Wood predicts that this actually would be closer to 3,300 by the end of 2025. This really gives that rate of return over those 5 years of around 38, which is extraordinary. Additionally, investors would not be surprised if Tesla could get to 1,700 by 2025. However, if Tesla gets to 1 million this year, investors could end up seeing 1,700 much sooner as the market starts pricing in more of this growth. If Tesla reached 1,700 by 2021, investors start getting to the point and asking themselves, does it still make sense to invest in Tesla with new money? Because now we're just pricing so much future growth. People say that about today's price. From their current numbers of vehicles produced and delivered in 2021, Tesla shows their potential climb and what it means for their trajectory in 2025. Thank you so much for watching, and hopefully this explains why we are so bullish on Tesla.